but then this is not the usual one which everybody knows. So I'm just going to pull this out from probably I have where I do store them before trading them. I know this is a schematic, but then it's not the regular one everybody trades or see on the internet. So I'm just going to send this on my chart so I could share that. So give me a minute, okay? Let me just bring it up. All right, so um, you all know we don't have just one schematic, right? We have multiple schematics, so you should not force anyone to play out for you. I actually noticed this because I've been doing this for a very long time. Okay, so that's how I'm able to know this. But how do I know this is not a regular one? When I try to fix them and it doesn't make sense, it means that's not what it's supposed to be. All right, so this is the current schematic which is playing out on you know GBP NZD if I was to be analyzing this. Okay, so you see this primary supply. This was I'm just giving a summary of how a particular section of how Wyckoff should look like. Okay, then I'm going to be doing for um, Elliott wave as well. All right, so you guys will be able to complex this on your own if you were to be doing this. So this is how I trade Wyckoff. All right, so this is the buying climax. Um, Now I've already did analysis on structure, right? I see this as a break of structure, internal highs, POI, right? But then this above this high is when this is invalidated. Okay, so now using Wyckoff, this is what I see. See? And then the sign of weakness, which came below structure, which is a break of structure, right? So now we're to expect an uptrust action, then a test before a break of structure. You see, easy. So I'm expecting an uptrust about within this POI or probably within this hidden order block over here. So that's it. So this is Wyckoff. And then price is decreasing, volume is also decreasing. You see? So volume from the beginning of the schematic, we could see clearly that volume is decreasing, right? So with this knowledge, we know price should be going back up anytime soon. But for a short while, and the proper confirmation which we could be using with volume is if price starts to go back up, and then volume starts to increase as well. We see volume increasing while price is going back up. We know it's a sign of a bearish movement coming in anytime soon. So if volume starts to increase, so this becomes our area of interest. You know what an area of interest means, right? This is our POI. This is a point of interest, right? And then this is also an area of interest. If price rises into this high with volume increasing, and then you see a break of structure or a minor change of character on the lower time frame, it's a sign of entry, right? So this is clear. This is just a simple work of analysis which anybody could do if you follow these rules. So you could rewatch this video in your free time, and then sorry, you could rewatch this video in your free time, and then try to do this on your own. Okay, so this is how I do Wyckoff. This is how I trade Wyckoff. All right. So does anyone have any question concerning this I just did before we move into Elliott wave? Makes sense like this, right? Does anyone has any question before we continue? Any question on this before we continue? So this is a practical section of how I trade Wyckoff, right?
There's a
So
one question in chat box.
okay, thank you for today, guys. We got to go. We'll watch it tomorrow. Thank you. let's say one misses an entry on the POI on the higher time frame. Okay. All right, Peter. Catch you soon. Okay. You say, let's say one misses an entry on the POI on the higher time frame. Okay. You could use the microphone, Isaiah, if you know how do we how the one we enter. I don't really understand this. It says let's say one misses an entry on the POI on the higher time frame. How do you re-enter? Price is always going to give you a re-entry. Okay, so price doesn't move in a straight line. It always creates liquidity, then breaks structure, right? So with that, you should know that price would always give you a re-entry. So if you do miss from your POI, it's good. You got a reaction. It would love to learn and some serious.
Hello, sir.
Yeah, I
Hello,
could hear
sir.
you.
Yeah, the
I
thing
could hear you.
is,
I could hear you.
sometimes there are times where the price moves away from the POI very fast, and you get a break of change of character. And by the time you enter, it's maybe it reverses back to the POI again, and maybe takes one out. I've experienced
Okay,
that most times.
let's use USDJPY. Okay, why I pick this pair is because it likes to move in a straight line. When it gets into a
Oh,
POI, it doesn't really give a re-entry. It just moves with a straight line.
okay.
Like now, look at the example from here. Let's say you had this demand zone marked out. Okay, and then you had this was the inducement, right? This was the inducement you had for the POI. Okay, so you're expecting price to move into this POI and then go back up. But then price moves into your POI and fails to clear out this high, which doesn't give you a confidence to take in on a trade yet. Okay, so you're expecting price to clear out this high, then probably return back into this zone, right? This is a clear example of what you just said, right?
Exactly, sir.
Okay, so on the lower time frame, we see, let's say the 1 hour time frame, that was a 4 hour higher time frame POI. So on the lower time frame, we see that price came into our POI, fails to break structure, instead creates a retail triangle pattern. You see the triangle stuff, and then breaks structure. Okay, so what do you do when price does such a thing? Finally breaks structure instead of reversing into this, clearing out this internal range lows. Price decides to go back up. Then you just missed an entry, right? So what do you do in such scenario? I don't think you can do anything about this. If you miss, you miss. It's a game. Okay, it's a trading game. You can't really do anything about this. You have to understand your pairs. Are you trading a pair that ranges a lot? Are you trading a pair that moves in one direction? Are you trading a pair that loves to clear out liquidity? There are some knowledge concerning pairs you should understand. Okay, is your pair a volatile pair that moves in a straight line? If I was to be trading USDJPY, like example, you just gave me this particular problem, and I gave you a clear example using USDJPY. That's because I understand that USDJPY is a pair that does such things a lot. You could see it moves into this POI, never gave a re-entry, just went back up. You see, moved into this POI over here, never gave an entry, just went back down. So if you're trading pairs like this, you have to figure out a way to handle them. That's using multiple back testing, all right? That's because why I'm able to identify this to you is because I have back test USDJPY, and I see this kind of issue happening a lot. You see, mitigated this POI, went back up, never came back for a re-entry, just kept going back up. You could see this kind of scenario happening over and over again. Okay, so there's nothing you could do about it. See, break structure came back down, clear out liquidity. Now break structure again, you're expecting a re-entry, right? But price never came back down, just went straight up. So I don't think there's anything you can do about it. There's no specific cheat code or strategy you could use to catch that. If it happens, it happens. There's nothing you could do. Okay? So just look for a pair that ranges a lot or loves to retest. For example, GBP USD, GBP JPY, or Euro USD gold. Gold also loves to retest. But then pairs like this is what they do. We can't force that from happening, all right? Okay, so is there any other question before we continue?
I have one question.
Okay.
First of all, let me apologize if this question doesn't sound very okay. But really, it's a challenge to me when mentors talk so much about back testing. Seriously, it's difficult. I don't really know what to do when you say back test. Uh, I've not been learning ICT for quite a very long time, but when you talk about back test all the time, I try to go to my chart and then I'm just at a loss on what to do. So I don't know whether this is a the question makes
Yeah,
sense, but
I
it's
understand what
challenging
you're
to me
saying.
really. I don't know what you
Yeah,
mean, what I should do.
okay, so when someone says backtest or a mentor says backtest, um, to me personally, this is what I do. Backtesting just means you should go back to your chart on your own and try to look for what you're being told or what you're taught. All right, trying to find it playing out on the live on the chart on your own. Maybe use the replay bar, and then try to look for the same thing you were taught. Okay, try to see same thing, try to look for the same thing over and over and over and over again. See, you're better at it because practice makes perfect. So the more you try to look for the same thing, the better you get at it. That's what everybody means by backtesting. Okay, but then there are different ways of backtesting. For me, when I say backtesting, I my own personal way of backtesting is this. Most of the times, I find it difficult to use the replay bar, because if I'm using the replay bar, most of the times I get it right a lot, because I could mark this as a POI and then say I want price to move back into this POI, clearing at this high. Then I'll play again and then wait for price to react. And let's say if price reacts to my high, clear out my high, or any of those stuff, it doesn't give me, the interest and all. Everybody has their own ways of backtesting, okay? And some people would say just go to the chart, look at the chart, and try to identify what you're told. For example, this was a supply zone, right? And this was equal highs liquidity, right? Created below the supply. Price mitigates it, and then price drops. Break structure again, mark out premium and discounts. This is backtesting also, okay? And try to identify what price did before price dropped. Why did price drop? Price came into a supply zone over here, just gave a few touches and then dropped. Let's say a break of structure or an invalidation. Why did price break this low? Right, this low did clear out the high, okay, and then this was liquidity. But why did price respect this? Price just came back down. Maybe that was because price never created an inducement before going back up. If there was an inducement over here, maybe price would have, you know, tested this, then going back up. But then that never happened. Okay, so let's look for another example. Why did this hold? Maybe that's because price broke this low, okay, and then came back up, did some, relative equal highs before tapping into this. Then price dropped to clear out the low. Why did price go back up? Price came into premium of this discount of this range. After clearing out this low, which is liquidity, then price went back up. But this never really mitigated any POI, so this becomes liquidity. This is all backtesting. Okay, this is another different way of backtesting. And then you could also backtest by opening the demo account, trying to use the live chat, trying to see all the scenarios playing out live and not using the chat, because that's how I backtest a lot. I prefer, watching everything play out live and then marking it out. If I lose, I lose. Then I try to find the reason why I lost that trade. Okay, I try to understand why I lost the trade. If it's a significant reason, then I pick it out and write it down in my book. Okay, so I could mark out this POI or this POI and expect price to react from it. If it doesn't hold and I lose, I look for the reason why I lost this trade. Okay, and then I try to understand why it doesn't hold. Now, for example, we have this clearing out this low, took out this high, came back, created liquidity. This was exactly what I told you guys yesterday, right? But then this supply zone never really hold. Price still went back up. Why didn't this hold? But then from my previous backtesting, I've understood that this was mitigated. Okay, this was actually respected, but then it failed to break structure. based on backtesting, I've understood that you could have a clean POI, okay, and then price. This is a clean POI. This is your POI, right? And then price could return back, mitigate your POI. But if this mitigation never breaks structure, let's say this was the low, this was the high. If this mitigation never breaks structure, then there is no reason for you to look for a re-entry within this. Remember what I told you guys yesterday was you need to wait for this pattern to play out in the lower time frame. But then this high failed to clear out this low, which means this is a weak high. And price is going to grab that because this now grabs this high, and probably might have liquidity within it. So this is going to invalidate this, which is what happened here. Okay, you see this demand did clear out liquidity and had this liquidity within it. Okay, so let's go to the lower time frame and look at that closely. So like I told you guys, it's a game of bullish and bearish scenario. Okay, so this was I also learned this through backtesting. Okay, if that's the only way that would not hold is because this demand zone over here had liquidity below it, right? And did break this structure. Okay, now this also broke structure to the downside and also had liquidity below, right? But then this never hold, but it was respected but failed to clear out this low, which means this has been respected and this broke structure here, right? And then never got tested. This is JP, this is USD JPY, so I'm not surprised. Okay, but then this was your entry, and this was why this was invalidated. This currently means the bulls are in control, and price is not ready to go back down. But that doesn't mean this was never respected. This was respected, and if you follow this concept a lot, if you should lose a trade, then it's probably on break even. Okay, so losses are inevitable. You're always going to have losses, but with this concept, you'll probably be on the right side. And with more examples on your own, looking for more examples of the chart, you get better at it. So that is what we mean, and that's what mentors mean when they say back test. So I hope that was helpful to you.
Thank you. It was.
Yeah. Yeah. So any other question before we move over to the next topic? Okay. Okay. So now I'm going to talk about Elliott wave. Okay. So now that I just showed you how I do my Wyckoff, right? I don't just go to the chart and try to look for Wyckoff from the chart over here. I do some structure analysis and then I follow Wyckoff. Same way I trade structure, right? I clearly do trade structure. With this, I've told you, means I trade structure. So if I'm to be trading Elliott wave, it has to also be with structure, right? Elliott wave is, as you all know, if you don't know the basics of Elliott wave, you could use my PDF file, or you could go to YouTube, as when I said, or search about it on Google. Okay, but then the basic, this is supposed to be an impulsive move, which is the one, the two. Sorry. This is the one, two, three, four, and five. Right? Okay, so if you want to be trading this, you have to understand the basic rules of Elliott wave. On my PDF, I listed out the rules, but then I'm going to give a brief understanding of them before we continue. Okay, so you know that wave one is an impulsive wave, wave two is a corrective wave three is also an impulsive wave four is a corrective wave, then wave five is also an impulsive wave. Now, wave one is an impulsive wave, but doesn't it's yeah, it's an impulsive wave. Okay, wave two is a corrective wave, but cannot go above wave one. Okay, it moves into the 61 Fibonacci level or the 72 Fibonacci level, and yeah, Elliott wave works with Fibonacci level. So the levels of Fibonacci, you have to understand Fibonacci to be able to use Elliott wave. Okay, so wave two has to move into 62. Anything above the 50 Fibonacci level to be validated, to be valid. Okay, so above the 100, it becomes invalid, and this is not an impulsive wave of 1, 2, 3, 4, 5. Okay, so it can't go above wave 1. And then wave 3 is the longest wave of the impulsive wave, because it's no, it has to be the longest wave. Okay, it has to be longer than wave 1, and then you're expecting it to be longer than wave 5, which is the impulsive waves of the 1, 2, 3, 4, 5. Wave 1, 3, and 5 are the impulsive, and wave 4 and 2 are the corrective. Now, wave 4 is a corrective wave that moves into. Please, if you are not understanding me, do draw my attention back. Okay, wave 4 is a corrective wave that moves into. Do just jot this down. If you're interested in Elliott wave, this I'm saying is just like a summary of the basics of Elliott wave. Okay, so the best you could do now is jot them down, or when you're watching the recording, you could try and understand them. Okay, so wave 4 is also a corrective wave that moves into the 50 or the 38 or the 28 Fibonacci level of wave 3. It can't move into the territory of wave 1. Wave 4 has to be within wave 3 and can't move into the territory of wave 1. So if wave 4 should move into wave 1, it becomes an invalidation. Okay? But then there are some corrective. This is an impulsive wave, right? There's an impulsive wave of 1, 2, 3, 4, 5. Same way there's a corrective wave of 1, 2, 3, 4, 5. But though it's called a corrective wave. How do you know the corrective from the impulsive? In a corrective wave, wave 4 is allowed to move into um, um, the territory of wave 1. If it's an if it's an corrective wave of 1, 2, 3, 4, 5, wave 4 can move into the territory of wave 1. Okay, that's only when it's playing around the territory. Sorry, that's when it's playing around the wave of A, B, C. But then this will be more understandable to you when I move over to that. Okay, but then this you don't expect to learn Wyckoff Elliott wave completely with just this knowledge I'm giving you, but I'm just giving you the basic concepts. Okay, you could also go through the PDF file which I made for this, and it will be more understandable to you because I've laid out the basics understanding in the video. Okay, so wave 4 is not allowed to move into the territory of wave 1 in an impulsive wave. Sorry, in an impulsive wave. Okay, and then wave 5 is the last impulsive wave um, wave, eh, of impulsive wave 1, 2, 3, 4, 5. And wave 5 only has one rule: it has to go below wave 3. Okay, that this is the basic rules of wave 1, 2, 3, 4, 5. So I just laid out this, and for those who are interested in learning a lot wave, could you repeat what I just said? Could anyone boldly repeat the law of wave 2, 3, 4, and 5? Is that with what I just said? Can anyone, tell me the laws which I just listed out for invalidation and to be valid? Um,
Okay, let me try.
okay,
Yeah. Wave 1 is an impulsive wave.
okay,
Wave 2 is a retracement that does not break the high of wave 1 but moves above equilibrium of the
yes,
first wave. So
yes, that's
so
correct.
into like 61% premium level. Then wave 3 is also an impulsive wave and the longest of the waves.
Correct,
Wave
correct.
wave 4, okay, that's the fourth one. Wave 4 is a retracement that doesn't get to the region of wave 1, moves into uh, equilibrium or below equilibrium of the third wave.
Correct,
Am
correct.
I correct? Then,
Yes.
yeah, there was a part I missed where you said wave 4 could move into something about invalidation or something. I didn't get that part.
Yeah, wave 4 could move into premium or above equilibrium of wave 3 into the territory of wave 1 only in a corrective move. Okay, only in the corrective wave of ABC. But that would be explained in the further, study of wave. So you could continue along the way. You would understand that. So how
Uh,
about wave five? You never said anything about wave five.
no, I think I lost you. I lost you there.
Okay, wave five just has just one basic rule. It has to go below wave three, and that's all. That's all about the impulsive wave of 1, 2, 3, 4, 5. So when you see a chart of someone um, giving you an Elliott wave analysis, and then he makes, you know, a wave 1, 2, 3, 4, 5, and then says he's expecting price to go back up from here. Is this correct?
No, it's not because it's not.
Okay, why is that?
Yeah, because 1, 2, 3, 4. Because 4 moved into the region of 1, and
That's
so
correct.
that
Yeah, that means it's validated. It's not correct. Okay.
yeah,
So and then if you do see, what about this? Is this correct?
it's also not correct because 2 broke the high of 1.
Okay, that's also correct. Means you're following up. So how about this? Is this
Yeah, also
correct?
not correct. Yeah, huh?
Is
5
this
did not break below.
yes?
5 did
Wave
not
five
break
never
below.
moved below wave three. Okay, so how about now? Is this correct?
Yeah, yeah, it is.
Yeah. So that's the basic rules of the impulsive wave 1, 2, 3, 4, 5. Okay. So now adding the ABCD wave. The ABCD wave is I just learned this. I think was it a month ago? When could you help me with that? Was it a month? I was taught by a friend of ours in a private group. We're all in. It was more like a challenge.
Yes, it's like
So
2 or 1 month maybe.
okay, so this I learned this just a month ago. Okay, so in case um you already know Elliott wave, um and then I missed something out. You should understand that that's because I just learned the simple basic rules that are important of Elliott wave. Okay, I know it's a very complicated strategy, all right, that does play around Fibonacci. Okay, but with the basic concept and understanding structure, it becomes a very powerful strategy. Okay, not everyone uses Elliott wave. I don't know why, but then I love the fun part of it because it's based off logic, not just a prediction. Okay, you have to follow rules, and I love it when you know analysis strategies are off rules, but not just predictions. Okay, so now talking about wave corrective wave of ABC. Wave A is an impulsive wave, right? Wave B is a corrective wave that doesn't go below the territory of wave 1. Okay, it retraces into discount of wave A, but doesn't go below the 100% of wave A. And then wave C is um, an impulsive wave that goes above wave A. Okay, so this is it's very simple. Where wave ABC is the most simplest wave among all. It's A is an impulsive wave that goes, um, just like one. It doesn't have any significant direction at all, only when fused together. But then this is separately. Wave B moves into discount of wave A, but cannot go below the territory of wave A. But then there are some scenarios, some complicated scenarios that are called irregular waves, where B could invalidate A with a weak. But then I only understand this using my structure, all right? So when I see something like that, it's structure telling you it's possible for it to go back up. did you have a break of structure before a raid? You guys all know what a stop hunt is, right? So you could still see a stop hunt of this. That doesn't mean this has to be picture perfect, okay? So if you do see a stop hunt and then price break structure, you could still have this as a valid trade based on structure, okay? But then following the rules, B is not supposed to validate with A, and then C is an impulsive wave that moves above wave A, okay? Now fusing this together, is that understood? You guys understood what I just said, right? I'm taking this slow and trying to teach you one after the other, so the webinar doesn't become useless like a YouTube video that is just want to gain subscribers. Okay,
I understand it.
okay. So um, fusing this together, you're going to be having something like this. Okay, wave ABC is a corrective wave, while wave 1 2 3 is an impulsive wave. As you all know, this is an impulsive wave, just like structure. Structure moves like this on the downtrend, right? I'm using the knowledge of this. Honestly, if you would ask me, Elliott wave and SMC, which is more easier to understand, I will go with Elliott wave because it's a very simple and easy strategy. All you have to do is just follow the rules. Um, Now you see, um, impulsive wave 1 2 3 4 5. It's like this range, okay, and corrective wave ABC, it's like the correction which moves into the impulsive wave. All right, so it's just like this: impulsive, corrective, impulsive correction, impulsive correction, impulsive correction. Okay, so if you should use this together, the basic rules are this: wave A has to go above wave 4. When being formed, it has to be an impulsive wave which goes above wave 4. And you all know an impulsive wave has to be 1 2 3 4 5, right? So wave A has to be formed of one. Please pay close attention. This is where things get complicated. So if you don't pay attention from here, you might get lost, okay? Wave A has to be formed of 1 2 3 4 5, okay? Because it's an impulsive wave. Right? An impulsive wave is 1 2 3 4 5. So it has to be formed of 1 2 3 4 5. Is that understood? And then B is a corrective wave, which means B has to be formed of what? Who could tell me what should B be formed from?
A, B, and C.
Exactly. ABC, it's a corrective wave. So B has to be formed of A, B, and C. Okay? So now, B has to be formed of A, B, and C. Where what should C be formed from? I told you C
One,
is a,
one,
is,
two,
a,
three,
is
four, five.
exactly because it's an impulsive
Impulsive.
wave. Okay, so it has to be formed of 1 2 3 4 5. Let me just push this back a little. Okay, so now this is the basic rule of this. C is a wave that is formed within premium of wave 1 2 3 4 5. All right, so this is just like following structure. Price has to retrace back into premium, right? So C is formed of premium of the full impulsive range. All right, so let me just take this. I just got my premium, so I haven't edited my Fibonacci rule and all. So sorry, C has to be formed uh, into premium of the full impulsive wave of 1 2 3 4 5. Okay, so C could be formed at the 62, so sorry, 61.8 Fibonacci level. It could be formed of the 78 Fibonacci level, and could also be formed of the 88 Fibonacci level, depending on the POI. Now, using SMC, I would just say this should be your liquidity. This should be your inducement, right? Ah, sorry, my mouse is having some issues, so I don't know. It's been difficult to move around. This should be your inducement, okay? And then this should be a break of structure, break of structure here. Then this should be your inducement, where B clears out the inducement, and goes back up. So C should be clearing out this inducement, clearing out this also, which moves into your POI, which you have above, because this will be internal highs. Okay, you see, so using SMC and fusing it with Elliott wave makes it a lot easier to understand. So this was how I was able to understand Elliott wave in a short period of time. I just had to fuse it all to SMC and then simplifying the whole thing. This A is an inducement for this, and then B is like clearing out the inducement which was created within this wave. Okay, so using the law of Elliott's wave, A has to go above wave 4, which means this is a break of structure, right? Or you could say a change of character. This is like the easiest way to learn this. You would never see this anywhere. I'm giving you 100%. You would never see this anywhere because there's nobody who would trade SMC and then try to teach you SMC and LLC. I'm planning on doing this on a YouTube video in the future, but then I haven't done that yet. So you are having the first class, first seat of this experience. I haven't done this particular video, but then this is like simplifying Elliott wave using SMC. Okay, so this now tells you that C has to be formed within premium of this impulsive wave, which means if this is going to be holding, then we should have something like this, right? So this means this has to be a downtrend, and pi should be retracing back into premium of this range, which brings price back down. I don't know if this is making sense to you. So this is the simplest way you could ever learn Elliott wave, honestly. So knowing wave C has to be pulled into premium of this wave, then you know that you should be expecting price to retrace from over here. So then this could be your prediction, and you will see this playing out because this now falls in line with SMC, and at the same time falls in line with Elliott wave. Okay, so now I could also mix stakes with Wyckoff and whichever I want to be mix it with. This could be the Bianca Max, a RST, UT, and then this could be the UTA, and then price drops. Simple. All right, so this is the rules and how to use um, Elliott wave. This is just the basic understanding of it. The other patterns which are formed are explained. You could see the patterns on my PDF file, so you could watch that. At least you have the basic knowledge and practical section of this. So reading and understanding the PDF file shouldn't be complicated to you. Okay, so before we go into the practical section of this, does anybody have any question so far?
Not for my head, sir.
Okay, so let's continue then. Let me just delete all this. Okay, so let me give you an example from this because I see a beautiful wave forming over here. Okay, so now we see this is an uptrend, right? So if we should be expecting any wave, it should be, and this should be an impulsive wave, right? So on the 45 minutes time frame, what do we see? Okay, let me use this which has already played out. All right, let me just replay this to this. Okay, so what do we have here? We have a new trend, and if I was to mark this would be wave 1, 2, 3, 4. Sorry, this is wrong. This is not drawn correctly. Let me draw that again. So this would be wave 1. Okay, this would be 2. Sorry, 1. Yeah, this would be wave 2. Because this is wave 1 and 2 moved into the territory of wave 1 but did not break structure, right? Wave 3. This is the longest wave, which is formed after wave 2 and takes out the high of wave 1. And this is wave 3. Wave 4, sorry, which is formed over here and never moved into the territory of wave 1, and then wave 5 comes in. This is wave 5. All right, so let me make this bigger. Okay, so let's cross check if this is correct. Okay, so this is wave 1, right? This is wave 2. Wave 2 never moved, never broke structure of wave 1, so that's correct. Wave 3 currently is is the longest wave in this. If you want to check that, you could use this to calculate how many pips. This was 200 this was 260 pips, and wave 5 was 202 pips, and then wave 1 was 138 pips. So clearly wave 3 was the longest wave in this. So that makes this valid. And wave 5 also was an impulsive wave. So you see, wave 4 was a corrective wave, wave 2 was a corrective wave, and wave 1, 3, and 5 were impulsive waves, right? So, and you could say this was corrective, correcting. Oh, sorry, my mouse is seriously having issues right now. And then, what do we have? This is presented as an irregular pattern, okay, on Elliott wave. That is a complicated part which cannot be explained using just few hours. It's something you understand due to practicals. Okay, so then this is called a triple zigzag. Okay, this is a zigzag wave. This is where ABCD is formed, but in a triple way. It's been explained on my PDF file. Okay, you could understand that in the PDF file. This is A B C. Also A, also A B C. It's a correction, but it's a wave pattern on its own. It's just as SMC has pattern, and then Elliott wave also has pattern. Um, Wyckoff has patterns of his own, so Elliott wave also has pattern of his own. Okay, so this is an Elliott wave pattern which is called a double zigzag. Sorry, not a triple. This is a double zigzag. Right. So you see, it's this is a bearish pattern. Okay, price is about to go down, so this is a bearish pattern. Price should be going back down after testing this. There's a resistance over here. Elliott wave is being traded with support and resistance and Fibonacci. Okay, not structure, but then I use structure. Okay, so using structure, you know that this was a break of structure, right? And you're expecting price to return into premium of this range. Okay, but what do we have here? We have an impulsive wave of wave 1, 2, 3, 4, then 5, right? Wave 4 never moved into wave 1, or did it? Yeah, it did over here a little bit. Okay, but and this wasn't a corrective wave, so but it was a weak, right? Like I said, it could still have a weight. It's not supposed to be picture perfect, but then let's see yeah, it did move into this, so we could see. Let's say this could be a problem. If this gets invalidated, we know, this was how we're wrong. Okay, but then this is our analysis, and then what we're expecting is wave C to move into premium of this range, right? We expect wave C, which is A, B, C, coming from here, A, B, and C. Then we expect price to drop, probably back down to test um, this level. I told you guys A, B, C has to form we turn back into a premium discount of this level of this range, right? So now we see price did a little complication here forming this wave. I don't know why, but price does what he wants to do. So this is what we had. So, but we know we do have a POI pending within this wave, right? Which is wave C. So we could say wave A, this was wave A. We said this was A, and then as I said earlier, wave B has to be formed with ABC, right? So this would be A, B, C, which will form B, and then we expect an impulsive wave to form with C, right? So this happened, and we had just a test of wave A, which on the lower time frame we give more explanation. Okay, so this tested the resistance which went within this wave. On the lower time frame, you would see price never broke structure of this. Okay, so this was a lower time frame range. We're expecting this, but then, like I said earlier, I use structure to trade also. So if this was to be um, correct, then you would see A, B, C. It did form within this range and never broke structure to the upside. Right? So if this had cleared out this high, remember what I said, A has to form above wave 4, right? But then the A came within this range. And if you looked at this, if you look at this, you would see this was wave 1, 2, 3, 4, 5. Okay? So how did this form? Formed on A, sorry, this was wrong. This formed A, B, then C. Then price came back down and formed a 1, 1, 2, then 3, 4, 5. So you see, so this was what happened. Price never broke this range, so never went above wave 4 and did this correction and price came back down. Okay, so that's what we have for this is what we have for wave. Okay, this is what we have for wave. Let me give another example. I will give another example before we continue. But then, is there any complications? Do anyone have any complications with this? So far, with what we've been told, this is the basic rules of wave. Okay. So, do you have any other complications with the basic which I have just told you? If you want to learn more about wave using um, SMC or using the what would I say rules, you could look at my PDF file. Okay, you could use my PDF file for further understanding and more knowledge of this. But then given you the practical aspect and then giving you an example of how it should look like. So if you're going to into wave, you need more studies of this. But then you have just been taught the basic rules and concept of it. So it should help you with your studies when you're looking into wave. Okay, that is how I trade my wave, and that is how I look into wave. So even if you're going to be using wave, try to observe structure also. What is structure doing? Has this range been broken? If this range wasn't broken, then you expect your wave to be within this. Okay? If this breaks structure here, you're expecting price to come back down, right? So then this becomes a wave one. If you were to calculate this, you say 1, 2, 3, 4, 5. If you do that, did three go into territory of wave one? Yes, it did. Is there an A, B, C? Okay, what's wave doing? All this stuff like that. You need those confirmations to be able to trade wave. Okay. So, any other questions about wave before we continue? Because I'm about to move into something else.
How do you get the PDF file?
Okay, it's pinned in my channel, but then I'll send it to the channel once we're done with this section. Any other question? Any question? Okay, so that's it for Elliott wave, and that's my knowledge on Elliott wave, and I've just shared what I have on Wyckoff also. So I'm just going to give you a little basic rule of my trading, how I do trade. So before that, when I already said it all, when it comes to psychology and trading, your risks, reward, and all plays a big role in trading. So how much are you risking? What are you risking, and what are you trading? I could be in a trade right now, trade selling. Let's say I'm selling USD JPY, okay, and then my stop loss above this high, right, and then I'm targeting these lows. Could be in the trade right now. I said this is a break of structure, liquidity test, ticks are below, stop hunts, and all. But then this could still be invalidated. Price could decide to go higher, you know, before dropping. Okay, so how would I trade this and be on the safer side? The safest you could do is your risk management. Okay, your risk management matters a lot. Or how much are you risking? Like you said, when you're going to a casino, you're playing a game, or let's say those playing games in casino. Um, they do risk, but they don't risk more than they can handle. Okay, so even if you're going to be trading, you should understand that this is kind of like a game. Is a game of prediction, so it's no different from gambling. All right. So if you want to be on the safer side, the best you could do is, you know, manage your risk. Okay, because if you don't, someone else is going to take your money. So you could manage your risk and then expect your predictions to go right. The only difference from trading and gambling is that you have the technical analysis. You have what to predict, what to understand the future with. You know, you have the candlesticks. You could do analysis with that. But you should understand that 100% trading is a game of prediction. Okay, so you should always manage your risk because this is another block. Yes, same time this is also being seen by the institution. So if they decide to take out the high of this, there's nothing you could do. Okay, so trade is a game of prediction, and you should always manage your risk. The psychology aspect when it comes to what do you do when you have losses. Okay, what do you do? How do you handle losses? The best I would say is you could just ask yourself a question. Um, if you were given an assignment, let's say you were given a ball, or let me just say this: the basketball players who play the basketball, a professional basketball could shoot a basketball into a net 10 times without missing on a practice game. Okay, but on a live game, he could be given a penalty to play and then he still miss it. Why is that? That's not because he's a bad player, but that's because he has something at stake. You know, there's a game going on. So the best you could do is manage your psychology. You know, no one is perfect. Okay, no one could be able to beat that stuff. It happens to the best of us. If you're having challenges understanding that you're trading and you should be managing your risk, and you should not let your trading get the best of you, and then you're not ready to trade and be on the safer side. Okay, so that's all I have to say about psychology. You know, we have just 15 minutes before the section is over. So those who have questions concerning this entire section from the day one, please ask your questions and we'll look into them. Okay, we want to really thank you all for being a part of this section and hope you have found value in this because you know it's a once in a lifetime opportunity to have such knowledge for a low price. Okay, so I just hope you guys use this valuable and then try to make the best out of this. All right. I'm currently having a low battery on my system, so should the case I trip up anytime, you guys should know my system is low. Okay. So please, those who have questions concerning the section from day one down to the day three, please ask your questions. Okay. And for the guy who asked for a review of the previous section yesterday, um, you should understand that okay, I can't really give the complete review because my system is currently low. But what I said, there's no schematic on. I'm not. I gave an example using the QM. Okay, and then this should be liquidity. I'm expecting liquidity to be created over here because a lot of people will be taking a trade on the first leg. So my entry would be when price clears out this liquidity, you know, to take out the low. Okay, so this is a particular example. If you're looking for a pattern, you could also look at my second PDF, my first PDF file, which was the PO3 pattern, which explains this a lot. Okay, so this should be liquidity. This is what I'm expecting. I'm expecting price to get an inducement, which everybody will start, stack up orders, and then taking that out. This is not. There's no logic behind this. It's just um price action. Okay, let me give you an example from this price book structure. Here, right? I'm trying to be fast, due to my battery, and then get that liquidity within this high, which was a bearish candle, which a lot of traders will be looking to sell for, right? So this order block becomes our POI. Okay. Then, if we're looking at this as a QM, you would see Wise did this. Okay. On a regular QM, traders will be looking to sell on the first reversal, which would be returning back to test this, right? But then the first return was this, and price never really moved into sorry, but price never really moved into POI. Okay, so this would be my inducement. This would be the reason why we pay attention to this. Okay, so price creates this inducement, which is also a weak high because it fails to take out the low. Okay, and then returns into a POI and then gives us an entry, which is this. Okay, so using the lower time confirmation, you would practically be in this from this end. Okay, but then price never really cleared out the low, probably because this was a bullish. This is a bullish higher time frame market. But then the only reason why this wasn't cleared out using price action, you would also see that this was an adjustment. Like I said earlier, this scenario happens as bullish and bearish market plays out. All you have to do is spot the right one to be on the right side. This cleared out liquidity from all these lows, right? From the previous section, I told you weak lows would use strong highs, and strong highs would use weak lows. So this was a weak low, right? Because this book structure here, and then this weak low produced this high, right? And then this high cleared out liquidity and book structure. And then you could see this also had a first return, which was the liquidity, right? Same way this had the first return. So the second return we came into our POI, which was this. Okay, so we would understand that now we have a weak high that fails to clear out this demand zone, which means this supply would be used as liquidity. So if you were following what let's say you were following what I taught you guys yesterday and using this I'm showing now, let's say you would be over here because I don't take aggressive entries, I take re entries, right? So you would be over here and then you would target these highs. Okay, so you see what I'm saying? So if you, sorry for those who are in the cell currently, because I know a lot of people are looking at this other block, but this has been mitigated. But then those who are in the cell, sorry, you're going to get stopped out. Sorry, I'm showing you you're going to get stopped out. I don't know. I don't predict the market, but with this, I'm expecting that to get stopped out because the supply is clearly not strong enough to clear out the demand. Okay, and then where should be our next PY? This we have here cleared out liquidity, right? Book structure. This was the first return. So this could have a reaction. And if this fails to clear out the low, which would be produced probably by clearing out liquidity, then returning to break structure. If it fails to clear out the low, means it produced a strong low. And then you could look for an entry and write price back up. So it's a scenario that repeats itself over and over and over and over again. Okay, so that was that. This is just the summary of what I told you guys yesterday, and then I just used USDJPY to explain Wyckoff, SMC, and Elliott and all. And I used this because of the example which he gave. So if you're thinking this was a planned pair, I just randomly picked this because of the example which our friend asked, the question which our friend asked earlier about pairs who don't give entries. Okay. So any other questions concerning yesterday's session? today's section or the previous day before yesterday's section. Does anyone have any? Okay, I will send the PDF file to the group once we're done. Okay. Yeah, with your back testing, you'll be able to understand what price is giving you and what we're teaching you. So you need more back testing.
All right, good evening.
Does anyone else have any other question? Okay, good evening. Good evening.
Yeah, I don't know. I have been hearing something like demand flip, supply flip. I don't know if you know about that and how do we put that into our trading. I've
I
always
do
been
know
seeing
about
it.
that, but
Okay.
I don't use that, so I can't
Um,
give you
Jay, there's a
that.
clear
Maybe I
example.
can help you.
There's a clear example on your USD JPY, the supply and demand flips. Like, I can explain that if you just give me the screen share option.
Okay, yeah, yeah, I'll give you that. And guys, should in case I leave the section, my system is low. Okay, when I would handle from here if I should leave anytime soon. Okay.
Samuel,
Over to you, bro.
can you please mute your mic? So basically, Samuel, where is it? Alright, so basically you asked for a supply and demand flip. So basically it's like that. Let me just draw the schematic first about that. So here's price is pushing down, alright, at this point. So we know that the peaks, the extremes of the the waves are usually having some sort of auto blocks, which in a supply and demand term is known as the demand in this case and supply in this case. So in here, the price is clearly respecting demand levels, whether it is in the between, whether it's some sort of golden ratio, or maybe it's extreme. The price is respecting uh, the demand levels. All right. So for example, if price do some sort of uh, a change of character, but in a sense, like uh, change of character can be valid if there is no supply demand zone right here. Like we would be expecting a reaction from this supply at demand zone right here. Like we'll be expecting a reaction of this demand zone, but rather what price did was it broke the structure. All right. But so in this case, there is a supply and demand flip. Like this demand was flipped by the coming supply. All right. So we had a clear example on USD paper, like when I saw that on the J screen, and I will explain that on USD paper as well. So as you can see, like this was a good demand zone. All right. So we saw a good momentum from here. All right. We saw good momentum, so we can consider this as a demand zone. All right. So what price basically did was at first touch it showed us a reaction. All right. But the price was not able to sustain above that, and sooner it broke below this supply demand zone. All right. So at this point the price broke below this supply zone. Why I'm saying wrong terms again and again, demand zone. All right. So at this point the price broke the demand zone, and we know that the demand is now no longer holding. All right. So uh, just to differentiate between a coach and a change of pattern, uh, sorry, a change of factor and a supply and demand flip. This right here is a change of factor. All right, this right here, because that is an extreme, the price pushed down, and in here the price pushed to the upside. So that is a break of structure. But that right here is a supply and demand flip, because that was the last candle from where we saw the momentum. So that is the last demand zone. So price at this level flip the demand zone. So we know that the demand zone has been flipped by the coming supply. All right, that means that if the demand zone is flipped, we have the supply in control. All right, like it's either the demand zone is in control or it's either the supply zone is in control. All right, so that means like if the demand zone has been flipped, we have the supply zone is in control. So what is the last supply zone we do have? We have this one. All right, so that is our supply zone which is in control. So what Pricr was, it tapped within that and it got reacted to that. It's just simple as that. Like I told you how to differentiate between the change of structure and the supply and demand flip. Like how do we trade based on that? Like I've posted few pictures of that in my channel as well. The supply and demand flip, and yeah, that's it. That's basically it. There's nothing more to that. Alright, so any further question? I guess Jay has left the meeting. Yes, Jay is no longer here. Um, any other questions? Um, if you have everything clear, just let me know so I can, end the meeting. Yes, I would not forget that. I will just read that in a moment. Yes, sure, Samuel will do that. Alright, so I guess that's the end of 3 days session, and I hope everything was clear, and I hope you do not regret joining this webinar. I hope this was valuable because we tried our best to make things simplified and knowledgeable as much as we could do. And yeah, I hope you all learned, and I hope it was all worth it. So I would share the recording soon, and I would share the link of the discussion group as well in a moment. And yeah, I will just end it here right now. So yeah, thank you for joining these 3 day session with us. It has been a great experience for me. And yeah, absolutely. So yeah, good night. Take care, guys, and we'll see you in the group.